of the summer, and it is 2 p.m. Eastern, 11 a.m. Pacific. I see lots of Pacific people. Welcome. I think I see BNO snuck in here. I see Jenny Cheape, which is always nice to see. Welcome, everybody. I think I just saw Tony Fitzgerald coming on straight out of the hurricane, which actually doesn't look too hurricanes by you already, huh? Already gone? Already by?
Yeah, we got a ton of flooding. We got cars underwater. Not us at our house, but Sarasota's got a lot of flood damage.
But it's gone though. Went right
Yeah,
by, right?
it is. It is gone. So a lot of flooding.
All right. Bad to hear that. Good to hear that your house is good though.
Yes, thank you.
You're welcome. All right, everybody. For those of you new to the call or haven't been on in a while, all these calls are transcribed, not transcribed. They are turned into audio podcasts. And you can get that any place you get podcasts. Josh usually does that maybe tomorrow or sometimes by the end of the day today. So wherever you consume your podcasts, you can grab this on audio if you want. Or if you hear something good, you can grab it and send it out to your team or whatever. We got a lot of great feedback from the last call with Adam Delmonico in Rhode Island. A lot of really good tips in there. That's a great one to rewatch, but there are a lot of them to great ones to rewatch or re-listen to. So welcome, everyone. Another side note, as you know, we are live streaming on Facebook and LinkedIn. So we do have a lot of people watching there as well, but thank you to those of you that are joining me now on this Zoom. So today you just have me without a guest, and we'll be resuming guests on the next call. And you know, we've had a little bit of we've had an interesting summer so far. You know, you probably heard me talking about as I travel around the country and I'm with real estate agents. They're telling me they're just seeing little glimmers of good stuff. You know, what most of the words have been is if it's a great house, if it's a cherry house, and it really doesn't need any work, and it's in a pretty good price range, it is gone in 10 seconds. Those are the houses that either need some work or take a little time or sitting. There's this thing the media loves to do, and they love to say, oh, the market's going to crash, housing prices are falling. And when you talk to agents and you talk to experienced mortgage people, they'll tell you not the case. Most any house that's going for quote unquote what they're calling under the list is simply because it was just listed too high. I mean, it was never listed correctly from the beginning. So very few markets where they could really say that the prices are actually falling. Again, if you've studied economics at all of supply and demand, you know, when there's millions and tens of millions of people that have stated that they want to buy houses, obviously, you know, the prices go up when there's not enough houses to buy. So we have a lot of interesting things going on. I'm sure most of your phones are ringing just on the interest rate stuff that's going on. I know a lot of loan officers are locking refinances right now. And those of you that don't remember this, because I've had this call for more than 4 years now, me screaming, dock, lock, schedule, and close. I hope that you are abiding by that. If you are taking refinances, I hope that you are insisting that they are docked correctly up front and that they are locked and that they are scheduled just like a purchase loan. I don't know how many of you all are feeling this yet as the volume pops up a little bit. Most companies are not hiring ops people back that quickly. So you really have to be very careful and watch your volume, especially if you're throwing some refinances in there, because obviously the purchase volume pops up at the same time. You have a lot of pent up demand. Rates drop, you know, a half or something like that, enough to just make it a little bit more affordable in certain markets. And suddenly a lot of buyers flood back in the market. I'm sure your agent partners and the agents on this call right now are doing a lot of phone work. They're making a lot of phone calls to people, letting them know what's going on from an affordability factor. That is absolutely happening. So what I wanted to talk about today, and you all have heard me talk about this a lot, is just the grind of doing this right and slipping off again. Most of you on these calls, a lot of you all know me pretty well. Some of you all have been through crush groups. By the way, as an aside, the next crush group is September 6th. If you yourself or know anyone that's interested, September 6th, Josh can put that link in the chat, or you can find that at bigJOEL.com if you want more information on crush groups. That is coming up. But most of you all that have been through crush groups or been around me know my thoughts on docking files up front, so we don't have a bunch of conditions when they come out of underwriting. I've been talking a lot about this, especially because I am already starting to get the eerie feeling of mortgage companies getting a little overwhelmed very quickly, loan officers not doing their job or getting sloppy from not being busy, tossing files in there that don't have the documents in. And then I'm just feeling like we're going to have a lot of loan officers yelling and screaming that their ops suck because they can't get their loans closed. Meanwhile, they're handing in heaps of crap or dumpster fires to the same staff that was closing X amount of loans. Now it's X times 2 or X times whatever. And then they're screaming, oh, we're understaffed. Our ops sucks. We don't have this. We don't have that. And the reality of it is nope, they're probably staffed correctly. They might even still be a little overstaffed. But the reality of it is loan officers are handing in crappy files and overwhelming the system. And I am feeling like that's coming right now. I'm feeling it from talking to my one-on-one clients. I'm feeling it from talking to people in groups. I'm feeling it from talking to real estate agents. The buzz that is going on with rates right now is overwhelming all the NAR stuff, sort of like, in an election year, which we're in right now. And suddenly there's a hurricane, which you just heard me talking to Tony Fitzgerald about, and it just takes over the news feed real quick. But it comes right back. We get a little rally. We get the rates to come down a little bit more. It'll be the main story in the news, whether it's politically based or whatever it is. It will be the main story, and your phone is going to ring. So what I wanted to talk about today, again, was making sure you're ready for that and making sure you're doing everything right. You all have heard me say this before. I just want to say it one more time. I dare you to go grab your last 10 loan approvals, and look at the conditions on those approvals. If you have any conditions with the exception of title, now if you submitted for pre-approval, that's fine. Then you would have appraisal, contract, homeowners insurance, and earnest money. If you have anything but those, you have failed. If you have large deposits, fail. If you have LOXs, fail. If an underwriter redid your income, fail. You need to think really hard about this. You want your ops people one and doneing your files right now, right through, cruising through at 100 miles an hour. You do not want to be that loan that gets pushed to the side when they get 6 more loans in right behind it, and then you're waiting because you have 27 conditions, and now you're chasing down all the conditions. If you're a newer loan officer, you don't know what you're doing, go to your manager or find another loan officer in your office that knows what they're doing. This is very, very, very important right now. I'm already starting to hear it, and it is coming your way. And if you work at a company where you've got a bunch of big producers that have kept their volume up, and those big producers add 10, 12 loans on top of what they're already doing, your loan is definitely getting pushed to the side. And it's especially getting pushed to the side if you submitted a crappy file. That is factual. People are people, and no people want to pick up a crappy file when they can pick up a well put together file, get it approved, and jam it through at 100 miles an hour. So I wanted you all to really think about this. And for today, I literally want everyone to pull your last 10 approvals and see the conditions on there. Look for patterns. Start cleaning that up. Don't let staff or LOAs or whoever your staff are, oh, we just get the LOXs at the end, it's fine. No, get them now. Get them now. Okay. Oh, we deal with large deposits after it's come out of underwriting. No, Deal with it now when it goes in. Don't give underwriters any excuse or chance to put any conditions on your files. They should be coming out very, very, very clean. This is going to be extremely important as we get busy, and there is a lag for operational people, and there's going to be a big lag. I talk to owners of big companies, small companies, and medium companies all the time. What they went through with all the rifts and all the layoffs, nobody wants to restaff and overstaff at 100 miles an hour and then have to deal with that again. Nobody wants to do that. So they're going to do everything in their power not to overstaff, okay, or restaff or start hiring all kinds of bodies. So if you're one of those loan officers that is not putting your loans together correctly, you need to really take a step back and take a look at what you're doing, okay? What you're doing. You don't have to fix it all at once. Look for patterns. If every one of your approvals has a large deposit question on it, well, there's pattern number one. Look at the bank statements before you submit the file. If you're not looking at it, make sure someone on your team is looking and is responsible for that. Underwriters should not be asking you what stuff is. We should be telling them what stuff is. That's the way great originators originate. You all have heard me talking about speed. In a rapidly moving market with interest rates, speed is key. You want to close everything as quickly as you can. If you're submitting dumpster fire files, it's very hard to close those fast. Those of you that have been around know that. Really hard to close those fast. So what enhances speed is how the file is docked up front. Your partners, your agent partners, there's a bunch of them on this call right now. They're expecting that. They want you to do that. Gone are the days of, oh, but at this lender, they didn't ask me for anything. They just had me breathe on the mirror and gave me their letter. And then, of course, you say, well, yeah, they gave you that letter now, and then they're going to just come back and ask you for everything. Okay. We need to be going hardcore on that. You want to be not that loan officer. You want to be the loan officer that is really locking the file, docking the file up front. Okay. When I said at the beginning regarding refinances, I like to treat refinances like a purchase loan. I dock them, I lock them, I schedule them, I close them. Okay. I don't like to yell at ops people, hey, can we close the Hess loan next week any day? No, that makes people go crazy when you say that to them. Okay. Schedule it just like a purchase loan. Put it on the books. Talk to the title attorney or the settlement company or whatever you're using and schedule that thing. There's no reason not to. Your ops people will love you for it. Okay? You should have zero floating refis ever. You should never have a floating refi, people. If you have a client that would like to refinance and wants to float, fine. Have them get their documents together, but do not start that file and clog your pipe with a floating refi. Ops hates it. Everyone hates it. And your secondary marketing department really hates it because it's impossible to hedge a pipeline of floating refinances that might or might not close. Okay. You're upset about pricing and this, that, and the other, and all this different pressure, but yet you got 10 floating refis in your pipeline. Well, you go in the bad boy or bad girl or bad woman or bad man club very quick because they can't even hedge your pipeline because it's unlocked refis, which may close and may not close. Okay. So take a look right now. If you have refinances where the people said, oh, I want to float, that's fine. You have them get all their docs together and you talk to them daily. And when they're ready to go, you lock them, you dock them, you schedule them, and you close them. Do not mess around with that at all. It's a big problem, and I'm already starting to see it with newer loan officers that don't really know what they're doing, that are clogging pipelines with floating refis right now. Regarding working and grinding, I know we're in the summer. I know we don't have as many people on this call as we would because we're in the middle of the summer. I will tell you that the best loan officers in the country right now are working. They are working and they're working hard. Okay. And they, of course, they're going to take a little break and take a little vacation or whatever, but that's not what they're concentrating on right now. They are concentrating on market share, taking market share. Loan officer compensation is a big deal right now. We have lots of loan officers extremely overpaid that don't know how to price, asking for PEs left and right. Those people are going to have their comp lowered eventually. But the best loan officers in the country have their comp in line. They want a good price from their company or their lender partner or whoever it is. They want a solid price. They're willing to take comp that's more in line with that price so they can literally take market share. They're not worried about making, I got to make 110 basis points on every loan. They're not worried about that. They'd rather have every loan, make less, come out on the other side, and deal with comp later. That is what's going on, and that's what the best loan officers in the country are doing right now. They're all doing it. I'm a blessed guy. I get to work with a bunch of them. I'm working with people that closed over 30 units last month and have another 30 units this month and then some. And they are all playing that game, and they're playing it to win, and they're playing it to take market share no matter what market they're in, from the tiniest market to the biggest market. They are playing hardcore ball, which means you have to play just as hard or harder than they are. Okay, big time. You should be working really hard right now. If you're playing it's Saturday, I don't take calls on Saturday because I'm a big to-do loan officer, that is a very bad idea right now in this market, because someone else is taking that call and you are absolutely losing that business. That business is 100% going away. I'm telling you that. That is factual. I'm working with these loan officers that are literally taking that business from you. So it is grind time right now. Grind like harder than you've worked ever. If you're on this call and you're standing right now, I'm proud of you. You have dug in. You did not give up. You have been grinding, and you're going to get your just reward because the market is going to come to you. We have massive, massive backload of people that want to buy houses. We have the phenomenon going on right now. Those of you with your cameras on can just thumbs up me if you want, if your camera's on, where these people with 3% 30-year fixed who have cranked up a ton of debt, and they think, I can't move because I got a 3% loan, but they bought the house in 2018, refinanced it in 2020 or 2021. So they've got that low interest rate, but they've racked up a bunch of credit cards and maybe a car loan. Their interest rate really isn't 3%. Their interest rate is really higher when you put all the credit debt together. We are seeing people move, be okay with getting rid of that 3%, being okay with what their new rate is, paying off all their debt, putting less down on the new house, getting a bigger house, and moving. We are starting to see that go on. Those of you that are seeing that, give me a thumbs up. There's only a couple of you with your cameras on, but I don't know. No agents are on here with their cameras on. I know they're seeing that right now. I know you all are also starting to see some cash out refinances as well. That is absolutely happening for whether it's for home improvements or whatever they're doing, but most of it, I'm sure, is debt. I'm sure a lot of it is paying off debt at the table, old school, where you got the settlement attorney or the title attorney or whatever, just writing those checks right to the credit card, and just getting rid of that stuff. And they're drastically, even if their new rate's 6.5 or whatever it is, man, their payment's probably going down $1,000 a month, because I don't know if you all have done the math, but you stick 25, 30,000 on a credit card at 26%, and you're on a salary, you got yourself a large problem. Like, I don't even know how you're getting out of that problem. If you make even a good salary and you have that much credit card debt at 26%, I mean, it is very hard to pay that off unless somebody gives you money to pay it off, or you get a loan from somebody, or you get a parent or a relative to give you money to pay that off. So the one place where they can pay it off is equity in their home, because I think in every market across the country, from the tiniest market to the biggest market, it's pretty factual. I don't know, Leslie, what would you say if you bought a house in 2018 in northern New Jersey, value wise, how much up is it from 18 to today? You see, to unmute.
It's a ton. I bought
Is it 40%?
I bought a house in October 2021. My value was up probably about 300.
Yeah, I mean, so I'm going back to 18 or 19, and you would have bought it for way less, right?
A little more, probably another 100.
It's big money sitting in their houses, but yet look how expensive it is to just live. I mean, who's been out to dinner and noticed that every place costs 30% more? Well, it's not just that the burger meat's more, it's that they got to put in Uber Eats in there because they got to put the delivery charge in there, and they're not lowering it if you go to eat there. If you pick up, it's still in there. It is very expensive to live right now. And people, sometimes I go out places, my wife and I look at each other, we're like, how are all these people going to dinner here? Like, what is going on? Like, who's paying for this? We're looking around, and I can tell you, I think the last stat was gaining on 40%. I think it was 38% of Americans reporting that have credit cards have them maxed. 38% maxed. I'm sure you all are seeing that when you're pulling credit on people. And I'm sure some of you, your eyebrows are going, whoa, how did you do that? Well, it's pretty easy to do it at 26% if you're living beyond your means. And it's not really even living beyond your means. It's just living in general is what's going on. So I think there's so many, these might be bad or negative things maybe for the economy, but for our business, for real estate, and for mortgage, this is good news. Meaning this is a lot of business for you and a lot of people that you can help put in a much better financial situation than they were in, whether it's moving because they have more kids and need a bigger house, or whether it's restructuring things because they've got a little out of control on their spending. So everyone should be pumped up, geared up right now. I love the fact that you all are on this call in the middle of August. I can't tell how many people are at the beach. I'm always suspect Tony's at the beach, but I'll leave him alone. I'm always suspect, who's at the beach, but you guys are working, and you all are going to be the ones that win. So put your head down and grind. I guarantee you will win. I've been through lots of these markets. Yes, this is an exceptionally wild market, but it always comes around. There's lots of people that want to buy houses. That is factual. As the inventory starts to free up and some of these people know they can move, these houses come on the market and boom, boom, boom. Everybody is really busy, really, really fast. And I think you all know these house prices are not coming down. They're only going up. And as soon as the agents start talking to their people that are sitting on the fence, we get the rates to move down just a little bit more. As soon as they start talking to people on the fence, these people are coming off the fence and they're going to start writing offers. So thank you so much for joining me today in the middle of the summer. I love you guys. Love getting to spend time with you. Again, this will be on the Big Joel Show on YouTube. It's any place you get podcasts, iHeartRadio, wherever you get them. This will be there audio if you want to re-listen to it, or if you want to play this. Those of you that are managers, I would absolutely play this for your loan officers regarding docking files big time. Everybody have an awesome week, and next weekend, grind, grind, grind. See you all later. Bye-bye.